But are you shocked? Because every day you read the paper or read the internet, trade war, trade war, trade war. Dow up 4% in July. How come?
Because earnings and profits drive stock prices. And, it's not enough to put a damper on the overall market. There are companies that are going to be hurt more than others, obviously. It's a reason why small cap stocks have done so much better, because they're more domestically focused versus having a lot of exposure to some of the trade issues. But Brian, we're getting pretty much through the earnings season now, and all I'm seeing are not only profits exceeding, but also revenues exceeding. I think we're so early in this cycle of revenue growth, and a lot of it is the stimulus from changes in tax policy and less regulation, and that takes a while to really cycle through the whole system.
Yeah, I think it was earnings are up over 20%, one of the best quarters we've had in decades.
Right.
Literally.
And this would not be without precedent after having such a big year last year in stock performance.
But let's talk about how to make money, because, and I'm going to oversimplify it, but this is TV, so let's oversimplify it. For the last 5 years or so, you could buy 4 or 5 stocks, the FANGs plus maybe Apple, whatever, and just let it ride. You didn't have to think. You could buy those stocks, walk away, count your returns. It's not going to be like that anymore.
It's not going to be like that anymore. I think now you're going to have to, there's going to be winners and losers. Again, it's all about valuation. And that's why I think Apple, for example, which is an inexpensive stock and a pretty amazing company. I mean, we've talked a lot about it. We do own it. And what's also interesting about it is it's what we would term a compounder of return. I mean, and they've not yet really allocated capital to acquisitions yet. I think there's a whole other lever to pull here, whether they make a big media acquisition or something like that. We don't know, but they have such an extraordinary base to start from.
Now, let me ask you, because last night on Fast Money, we talked with Kevin O'Leary, and he was annoyed that they weren't giving a higher dividend. They were buying back $20 billion in stock, but as an investor, he wanted more cash. That's kind of his thing. You're an owner of Apple. Are you happy with how they're using their cash?
My colleague Will Potter and I talk about this all the time, and we focus on how companies. Yes, exactly right. Than the dividend on Apple. No, we actually prefer companies that deploy it into other productive assets, taking a dollar, turning it to $1.25, and then taking that $1.25 and compounding it from there. Returning capital in the form of dividends is a component of the overall return of the stock, but we'd like to see them allocate them to other productive assets. And the company can certainly walk and chew gum at the same time with the extraordinary cash flow generating capabilities.
Active stock management is coming back, isn't it?
It's been happening all year this year. We've had an easier time beating the benchmarks that were benchmarked against this year. And I just see that trend continuing, because it's not going to be so easy as throwing the lever and buying 4 or 5
So give us some
stocks.
ideas quickly going forward for our viewers and listeners out there. What are some things, themes, companies, whatever sectors you like right now, Dan?
You want to be pro-cyclical. You want to buy financials and industrials. I still think we're very early. I mean, I still think, you look at a company like JP Morgan, it's unbelievable how cheap it is. I was in Farnborough a couple of weeks ago in London, and right before that, I added to our position in JP Morgan at 105, 106. And that was after they reported earnings, and the stock went nowhere, and now it's 115. And, to me, it's still inexpensive, and there's a whole other wheel to go. I mean, I still think that you've got this whole cycle from tax policy of bonus depreciation where companies are going to make bigger capital investments. That's got to drive performance in a lot of industrials, and that's another area you want to be over.